Welcome to your Mortgage Insider Update for Monday, December the 16th. We are 2 days away from the Fed announcement of the most likely outcome, a 0.25% rate cut. But this is also going to be the round of their quarterly economic projections, which will give us the famous dot plot, which is where each Fed member posts into the future where they think the federal funds rate will be through 2026. So previously, that had been likely that they were going to continue cutting, likely a 1% cut throughout 2025. The worry is this week that they might come back with a 0.5% cut into the future. So even though they will likely deliver the 0.25% rate cut this week, future cuts are going to be less likely. And we will also be getting PCE, the personal consumption expenditure, at the end of the week on Friday. It's a little early Christmas present that could also move markets in a time period where the holiday trading period next week will be very light. So it could be pretty volatile. We could see a move up in interest rates if the PCE report comes in as expected, which is going to slightly increase inflation. And we're expected to see the Federal Reserve rate cut with future projections being not as kind. So let's take a look and see where that leaves us today. So this week we start 4.4% on the 10-year Treasury. It is dead even this morning. That is shy higher than it was 1 week ago at closer to 4.2%. And we can see back on December the 9th, 4.17% broached just above that 200-day average that following day at 4.2%, and then stair-stepped higher, breaking back above the 25-day average, bringing us back to end of November, right before Thanksgiving rates, before we had that beginning of December pullback. Mortgage-backed securities, these trade the opposite of the interest rate. This is the cost to the investor when they buy the mortgage bond. That is up slightly this morning, but we can see that that is quite a bit lower than it was just 1 week ago. If we take the same time period, December 9th, we broke much lower. The price dropped as the interest rate started to increase on consumers this last week. So keep an eye out and an ear out for the Federal Reserve Open Market Committee announcement on Wednesday. The Fed chairman will have his speech. Will be asked lots of questions. Could be a very volatile end of the week, starting on Wednesday into Friday with that PCE report, and then next week with the light trading. We're likely to see, with 2 days of the market closed, hedges coming into that long weekend. I know people will be working on Monday the 23rd. Markets will be open, but I would imagine that'd be pretty light trading. So as the week closes out, keep an eye out for a rocky ride. Take care.